Let's look at problem 18-8. It's a problem that deals with allocation of expenses and journal entries for Caring Clinic. Okay, this is a nonprofit organization. Caring Clinic, a VHWO, conducts two programs, alcohol and drug abuse and outreach to teens. It has typical supporting services of management and fundraising. Expense accounts from the pre-allocation trial balance as of the end of the year are provided here. Okay, so we've got funded by unrestricted resources and then funded by donor restricted resources for a total of $584,000. Now, in preparation of the allocation of expenses to the programs and the supporting services, Caring Clinic conducted a study to determine an equitable manner of assigning each expense, and the study resulted in the following table for percentage allocation. So let me slide this a little bit and we can see what that table showed. Okay, we've got a 60-40 split for all expenses other than depreciation financed by by donor restricted contributions. Okay? And they also came up with allocations for other items. Okay, so we've got salaries and payroll, telephone, miscellaneous, nursing and medical fees, education seminars, various percentages were done. All right, what's our first requirement? Using a total allocable expenses financed by donor restricted resources, prepare the journal entry to assign these expenses to the programs. All right, well, let's take a look at this. Now, remember, 60-40 is the first split we need to be concerned with. And that's a split between all expenses other than depreciation financed by donor-restricted contributions. So if I click over to this image here, we see that what you're going to do is list all of those donor-restricted contributions going down. And we came up with 143,000, 23 down to 10. Now let's go take a look at those again, right? And these are just these right here, 23 down to 10. Okay, so that's 143,000, and we need to split those 60-40. There's our split. And if I slide up a little bit, we can also see that the journal entry to do this split, which will wind up with that 85,857.2, is a debit to the alcohol and drug abuse program, a debit to outreach, and then we credit all of those dollar amounts. Okay, that's the entry we need to do to assign allocable operating expenses to programs and then to close the expense accounts out. Okay, makes sense? Okay, now I've put requirement 2, 3, and 4 on the screen. Requirement 2 says, using the following format, prepare a schedule to show the assignment of the allocable expenses financed by unrestricted resources to the various programs and supporting service using the percentage provided by the problems. Okay, now you see I've moved requirement 2 slightly and added those percentages so we have that in front of us. We've done the 60-40, now we need to worry about the others. So salaries and payroll goes 30-20, and supporting services 30-20. And that's for management and fundraising. Let's take a look at the solution now. Okay, now I've blocked out the solution to part 3 so we can focus on part 2. Okay, so what we've got to do is use those percentages and then split out the salaries, the telephone, the nursing, the education, the research, the medical cost, and the provision for uncollectible pledges, and then jot them down into the various programs and supporting services according to the percentages. Okay, so this is basically an exercise in multiplication. Now, if you need more time to review this, go ahead and pause the presentation. I'll now move on to part 3. Okay, part 3 says, using the schedule from part 2, that's down here, prepare a journal entry to record the allocation and closing of the expenses financed by the unrestricted resources. Okay, and now you can see how that's done. we're going to take that $224,000, that's going to be debited to alcohol. Outreach, $124. The management, $24, and the fundraising service, $47.7. And then we're going to close out the expenses, and all of these dollar amounts come right from the list of expenses that we came up with. So essentially, we're just making sure we make these entries correctly and we account for all the expenses. Okay, and now I've slid down so you can see the closing entries too. Okay, so we've got a debit to 407, credit to investment 13. We've got various entries here. Now, where did this information come from? Let me slide that back. My mistake. We've got the journal entry 3. I think I included a screen image from a different problem for number 4. So part 4 is to prepare a journal entry to assign plant-related expenses to program and support services. Okay, now I've added that correct part 4 so you can see the entry. We've got to account for the $20,000 of depreciation expense as well as the $4,000 of interest expense, and then allocate it according with the recommendations. And that's this problem, everyone. Thank you.